All right. Good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Bitcoin has broken out, legitimately broken out. You have hit prices as high as on the Coinbase exchange, $30,014, which, not too long ago seemed like it wasn't going to happen, as we traded in a very tight range for almost 3-4 weeks, and ultimately the breakout occurred, and it occurred with very little push from the overall risk markets. So does that mean people are legitimately buying Bitcoin? Well, we know Michael Saylor did. So, yeah, it's safe to say people have been buying Bitcoin. Typically, when you do form a consolidation pattern under a resistance level that is pretty bullish, but it doesn't always work out like that. But it did work out, and I was able to position myself long at 3-day support. We'll talk about that support, and we'll also talk about a few other things. One interesting thing that I've seen here on the random altcoin list was Mana. For some reason, for the last several days here, you can see that it's been trading in a pretty consistent tight range, but with a ton of volume. And the last time that we seen volume like this was during the bear market. So does that suggest we're going to see a breakout, or are we going to head lower? If you look at the daily time frame, you can see that you are above most of your major moving averages except for the 200. So, a breakout above all this resistance could get you a test of that. So this could be a potential trade opportunity setting up. We'll discuss that and a few other things. So welcome. If you're new to the channel, welcome. If you're not, obviously, welcome back. It's good to see all my few ledges in the chat this morning. Good morning from everybody. Good mornings, good mornings, good mornings. Also, another thing of note, we do have CPI coming out tomorrow morning, and then we have PPI as well as initial jobless claims Thursday. So for the next 2 days, we do have some crucial data coming out. And I typically don't like to see breakouts ahead of very high event risk like that, because in a lot of scenarios, you will get sell offs when that occurs. But we'll see if that ends up propelling Bitcoin to the upside to fill that gap at 34,000 on the CME chart, or do we finally get a pullback? If we pull Bitcoin up over here on the big chart, look at the month, you can see that for 4 straight months on the Coinbase exchange, you have closed bullish. Our original bullish position on Bitcoin is 16,540. That was purchased on the first day of 2023. And then we've been waiting and waiting and waiting through all of this consolidation for entries. There's a few people taking a couple short trades. There's been long trades. Everybody's mixed. The sentiment was very mixed as to which way it's going to go. Apparently, Bitcoin is up almost 100% from the January 1st opening day. And we still have Kappa, who has said that it has still not invalidated his bearish thesis. Well, I would sure love to see what his bearish thesis is, because where I come from, an asset trending up 86% from the January open is very much a bullish asset and not a bearish one. And I really don't care what technical analysis you use. Any and all technical analysis on Bitcoin is bullish. Whether you're a wave counter, it doesn't matter, right? It doesn't matter. Whatever form of technical analysis you use, this asset is obviously bullish and has been for a while. So what do you do in a bullish market? You look to buy off support. That's what you do. The support that I bought off of was 3-day support right here. Boom. And essentially, I waited on this right here, this wick to the downside. That's where I got long. My exact entry price is 27797. You can see here 27811. Obviously I use a different exchange to position myself, but 27797 is just right around there. So you can see that I almost bottom ticked that wick, and it was not long after that we got the breakout. So I'm glad that happened. I'm glad that happened in that way. Looking at the 3-day chart, you can see that it was making higher closes on the bearish candles as well as higher closes on the bullish candles. That's typically a bullish signal. On the weekly, there you go, 2 week. Let's go to the weekly. You had a golden cross that did occur. It wasn't long ago people were talking about the death cross on Bitcoin. And when you did get the death cross, to be fair, you did get 3 weeks of bearish price action. So you were able to make a little bit of money to the downside. However, in a bull market, you typically want to look to position yourself long, because the amount of money that you could make in a long trade is always infinite. That means as long as price continues to go up, you can continue to make percentage gains. So here we are looking at Bitcoin. We don't really have any major future targets. If we go over here and look at the weekly, you can see that you have cleared most of your weekly highs that are of any relevance whatsoever. You have potentially made this week's high the midpoint, which is a legit breakout. So now shorts is, their backs are against the wall. Can new supply affect the market? Obviously, the answer to that is yes. Of course, people coming in taking profits will affect the market. You also have new short sellers that are diving into this thing, thinking that it is going to roll over and all of that stuff. So it can absolutely affect price. But we are watching this monthly high up there at 31,964. That's the next area of liquidations as far as on the monthly time frame. And then we have an old monthly support up there at 35,060 that once the breakdown occurred for the bear market of 2022, you never did retest that price. So this is the price of which I think you would ultimately get to if Bitcoin were to stay bullish, and then you would see sellers kick up as you have new gaps. So here is the gap chart or the CME chart with the current open gaps. You have that gap up there at 34,450. That ultimately is a bullish target, but that does not mean that we will get there in this month or the next month. It doesn't mean we will ever get there. It's just there. That's all we can say about it. And then we have another gap down here at $20,000. So, in a sense, that's kind of the range that we are looking for the majority of 2023, because typically the way Bitcoin works is it works on a 4-year cycle based on the halvings. Or we should say it has in the past worked that way. And until it stops working like that, that's what we will look for to play out again. So, but 2023 can still be a very sideways year. Absolutely. Coming off of one of the biggest bullish markets we've seen in a very long time. If you remember, once you had the '08 financial crisis, the markets have literally been 100% bullish, minus a couple months in 2020 when we had the pandemic. But we know what the Fed did during that time, and that created a very strong bullish market inside of basically the whole of crypto. Every crypto asset got massive rips out of that. So, are we going to see another bull market like that? Well, I don't think you'll see another bull market to that extent, as if you look at the BLX chart, you can see that it does, in fact, on log, show diminishing returns. Um, For some reason, I do not have logarithmic scale. Give me 1 second here. Did they do an update and I'm just not aware of it? Where is log scale? Wow. What happened to the log scale? If anybody knows where the log scale went, that would be pretty awesome and helpful. What what happened to log scale? It used to be right here. I guess it does not matter. Right click on the scale. There it is. Appreciate it. That is not very cool. Yeah, I don't like that. I like it better the way it was. Well, anyways, you can see obviously that since the halvings, you've seen diminishing returns. I mean, the more expensive an asset gets, obviously the more money is required in order to make the market cap bigger. So the more expensive an asset gets, the harder it is to get, 1,000% gains, right? So each one of Bitcoin's bull markets, as far as percent returns goes, have gotten smaller on each of the bull markets. But still, we will be looking for a bull market to come once we do get into the area of which where the halving will be. So currently 31,964.56. Also, another thing you can do here for potential targets is this. You can line up last month's high, take your Fibonacci retracement tool, click on the low of this month, and then just bring this line up until you get the 50% retracement on that line, that yellow line there. That is the 50% retracement. You can see that does it right there. That price is what, 31,149. So ultimately, that's a good area to look to take profits, as that would then make last month's high a retracement back to that, a 50% retracement. As we know, price likes to do this. So if I go back there and do this, you can see this one did a little bit higher, but we do know that the midpoint of these candles is very important. So we could see as high as 31.7, 31.5, anywhere in there. And also just naturally, the month of June's open can act as resistance as well. So 31.7. But as far as any other resistances goes, the only thing that you have on a technical basis are a few lows over here that could act as resistance. Typically, we don't look for wicks to act as resistance. We don't look for wicks to act as support. They are generally targets for us and this strategy. But we have seen, people take and apply pressure there at those areas because other people do look at a wick low as a potential resistance. So that's what you're currently playing with right now. We'll see how it ends up playing out in the next couple days. But as far as risk assets are bullish, this breakout can continue. Shorts backs are against the wall. Let's pull up the SPY over here. You can see that the rallies have been getting smaller since the bear market low was put in. This is actually what some people are using as a bearish case. You can see what I'm talking about. There's your bear market low. Notice how big the rally was. Then you pulled back. This rally was smaller, pulled back, and then this rally was even smaller. So they're looking at this as sort of like a distribution phase, but that's not how I see it. How I see it is you're making higher highs and higher lows. Therefore, you're trending to the upside. And as long as you're above January 1st, opening price, you are in fact in a bull market. Because people are paying taxes on what happened in 2022. We are no longer concerned with the year of 2022. So whatever happened in 2022 is irrelevant from this point forward. And there is your current yearly trend. Actually, you're trading inside because your 2023 high is going to be on that Thursday, February 2nd candle. That's going to be your yearly high, and your yearly low is going to be January 3rd's candle. So yearly low, yearly high, you're trading inside of it. Whereas on Bitcoin, you have made fresh yearly highs. It was brought to my attention that on Bitstamp, you have not yet made a fresh yearly high. Well, you did now. So as of yesterday, we did not, but as of today, you have. So there is your fresh yearly high. But we typically like to use Coinbase's data feed because it typically, for me, it's the best one as far as, not having like gappy price action, if you will. Coinbase has really good liquidity. All right, so let's see what's going on. 43 people in here. Thank you guys for your time as always. But we're going to keep mana on the watch here. You can see that similar to Bitcoin, when it was down up here, we had a compression of volatility. That just means like if you put your Bollinger Bands on, you get a squeeze in the bands. Whenever your volatility squeezes like that, you typically look for either a breakout or a breakdown. Since all of your major moving averages are currently underpriced, we would be looking for the breakout. Let's see if we can get, which this in itself is a form of Bollinger Band, but it just shows you that volatility's on the lows on the daily time frame, and you've had a lot of volume traded in the last week. If I pull up the weekly, you can see This bullish week here, not a lot of volume. This doji, a ton of volume. And then we are currently getting bullish continuation, and you have a little bit more volume. So the majority of the volume came last week. Today's just Tuesday. Naturally, you have resistance here on the weekly. So if we go back over here to the daily, get rid of all the indicators, and just kind of measure where price is right now. 2 weekly res is a 2.8% move. Not a big move, but still a tradable event potentially. And earlier when I was looking at this candle was red. Today's candle. It was here. So it does look like you are starting to make a move here. So this could be a trade right now. So we're going to watch 0 spot 6141. Once again, that is MANA USDT. And if I do take the trade, it will be on Bitcoin or on Bitget. Let me pull up MANA. The futures. And we don't want to use a lot of leverage because this thing moves. So I'm going to put my leverage slider down to 10x. And here we are coming into the area where we're looking for an entry. I would have liked to have gotten a full-on test of that level. It does move pretty rapidly. Profit target on something like this, I don't think you would get a fresh daily high, but you can absolutely take profits there just to get your risk off. If it continues up, right? And if my thesis is correct and you do get a breakout, you take the majority of your risk off there at resistance. So that way, if you do get a squeeze up to here, you can take more profits off later. And in a sense, get paid twice for the trade. Current risk would probably just be under this right here, as that would set up a 2-to-1 risk to reward. Right? Something like that. An hourly close under this candle's close. So 6138 would be a bullish invalidation. All right. How many like future legends? Come on, snag those likes from my boss. Yeah, if you don't mind, that would be a good. That would be awesome for me. Predex says good day too short. Let me explain something to you, Predex. You typically don't want to short a very bullish asset. You want to look for shorts on assets that are bearish, not bullish. by shorting assets that are bearish on pullbacks, or when you get those bullish rips or pops in price, you look for resistance, then you look for shorts. You don't look to try to short a market that is moving up, as you will typically get ran over. I mean, I'm sure you've seen the Korean guy that's already lost several $1 million trying to short Bitcoin. And the reason he has lost several $1 million is because he has already been liquidated 3 times. 3 times. So if you have taken 3 shorts on Bitcoin and lost all 3 times, that is the marketplace telling you that you are in fact on the wrong side of the market, on the wrong side of the trade. And if you did not participate in the rally, I don't suggest that you buy it now on highs, obviously, but at the same time, you can look for opportunities elsewhere. We know that usually when Bitcoin has a very big bullish move, which it wasn't a massive bullish move either. Today you're only up on Bitcoin 1.9%. So it's not like this is a 10 or 12% day. Yesterday wasn't either. From low to high on Bitcoin, you had a 5% move yesterday. So it's, yesterday was a decent move, but not really a whole lot going on today. Just more bullish continuation. Trying to short that is not the right call. Even if you get lucky and nail the top tick, there is no other technical reason to take the short other than it's up, right? Like, that's your reasoning. Why are you getting short Bitcoin? Because it broke out. Can you see the logic in what I'm trying to say? Right? That's also why retail gets crushed. That's also why retail has trouble making money in this industry, because they missed the breakout and they got FOMO now. So the only other trade to take is to short it. And I must trade now, right? That's that caveman mentality. I missed out on the move, so therefore I must trade. And the only other way it can go is down. But when shorts backs are against the wall, when you're clearly squeezing shorts out, you don't want to be shorting it. But if you do want to short it, be my guest, as it is your money. It's your money to lose. Your money to lose. Now, Bitcoin did give us several opportunities to get long in this consolidation. If you just watched daily support levels, you had an opportunity there. Then obviously support moved up. You did have a bear trap here, but that bear trap was revealed on this candle here. Right? The bear trap was revealed. Then you set in a new support and did the similar thing. But once this candle was formed, you had multiple days and the 20 simple moving average was underpriced. So you have multiple days, 1, 2, 3, 4 days to get long before the breakout. So there's no reason why anybody should have missed that, especially if you are subscribed to this channel. Especially if you are subscribed, because we have a long bias, a long-term bullish bias. We will until we get a bearish invalidation. Bearish invalidation would be your August high taken out. That would be a invalidation of bullishness. The August high. Right there. That's your last and highest bullish candle. I'm sorry, bearish candle. So if you take that out to the downside, that invalidates your bullish move. It does not mean that it will go down and make fresh lows. It's just an invalidation level is all. That just means that now you have to wait for a new support to form before you can look for long entries again. And then you also have to be aware as to the fact that you did in fact take out an inval level. So, but that's neither here nor there, because that's a long ways away from where current price is, or near term price. 25,214 would be that level. So as long as we're above that, in my opinion, you're bullish. I still think you're bullish even if you get below that, because depending on how big this squeeze is will determine how wide this Bollinger Band gets. You can see on this pump here, it got extremely wide. So that would make the invalidation level much lower, just using the Bollinger Band. And this is just your average normal Bollinger Band. It's the current settings, right? Current settings. Nothing special about it. Length 20 days. I think it's supposed to be 14. I think I was playing with it. 14 is your standard period. And there you go. Squeeze. When we're squeezing like this, we know a breakout is coming soon. And it did. There it is. Boom. So now, once you've broken out, you look for price to stay around the top edge of the Bollinger Band, as typically that's what happens in a bull market. Here's your bull market here. There's your breakout. Notice how basically every single day stayed at the top edge of the Bollinger Band. That's what I would like to see occur here. 7, 8 days of bullishness. Get up there, tag that monthly support, and then you can look for potential short setups. That monthly support is important. It hasn't been retested. It doesn't mean it has to be retested, but typically they do get retested. Especially big levels like that. It's a monthly support. Not only is it a monthly support, there is a CME gap up there that never was refilled. And by that time, If price gets back up to $35,000, all of your bears will be bullish. All of them. Every bear on Twitter and in YouTube world will now be bullish. And that means it will be time for us trade talkers to change our bias from bullish to pullback mode, which we are currently in, still looking for a pullback. This consolidation is a pullback. This is a pullback. You just had a very long-term consolidation. That's what a pullback is. This is a form of consolidation. It's just, it went down, right? Consolidation. Consolidation. Breakouts after consolidation usually have measured moves, but I'm not going to try to put a measured move on that because this is a very big move. And to say that, your measured move from there to there, that would put us up to 35K, but you're getting a little bit extended. You're up from the lows 100% almost. And let's be real. 100% move off the lows is a big move. So we're not like, yeah, you don't get uber bullish after that. We've been bullish ever since we got into this zone over here. Naturally, the FTX breakdown was an unforeseen black swan event that brought prices lower, but we switched our bearish narrative from being bearish to being buyers here. So we've been essentially in buy mode since June 2022 based off of the MVRVZ score indicator, which is this thing right here. Because on historical price with Bitcoin, this metric has been a very good identifier of value. Whenever the indicator itself is in the green zone, that is what is consistent with value area. So wherever you have a value area, people will like to be buyers. And in, all of Bitcoin's history, this indicator has been flawless. 100% of the time it has worked. And it doesn't mean it will work this time because we work off of probabilities and statistics. This does not predict price. It just goes to probabilities. It means it has a high probability of, you kind of want to switch your short bias to being no longer short biased when you're down in this area. And then when you're up in here, you don't typically want to be a bear, but you do want to be looking to take profits. And the last bull market you had, you can see that you struggled to even get into the overvalued region, which is another reason why I think people thought that on this pullback here, before we made new all-time highs, they were looking for something like this to play out again. You don't look for the same exact things to play out. But we were waiting for Bitcoin to get into this area before we stopped being bearish. And now, in hindsight, That was the play, was it not? Because from the time that we took bullish entries from down there, those positions are up in some cases over 80%. We remain very consistent on this channel, to say the least. All right. How many like future? Oh, never mind. Wasn't talking about shorting mana. No, I'm just saying I wouldn't be shorting Bitcoin either. Mana is actually, like I said, I don't know if anything's gonna come out of this. Right? We don't know if anything's gonna happen, but it's just I find it odd that for some reason there's been a lot of volume being thrown down in this asset. And that's what we look for when we look for tradable opportunities. We look for inconsistencies or things that stick out to us as being, out of the norm. That's definitely out of the norm. S&P 500 not doing anything for the last couple days. Probably won't do much today with CPI being on the headline docket for tomorrow's event risk. Same goes for NASDAQ and the Qs as well as the RUT. Lot of headline risk coming our way. Here is a very bright screen for you. Today's Tuesday. Not a lot of stuff on the docket for today, but tomorrow there is CPI. Boom. Right there. And they are looking for a higher print. 0.4 was previous month. 0.4 is forecasted. I'm sorry, this was the last one, 0.5. So, no, I'm wrong. They are forecasting a lower print, 0.4, by 0.1%. Let's see what year over year looks like. This one here is going to be the one that everybody's got their eyes on. This is the one, forecast of 5.2. If you get a 5.2, that will be the biggest drop that we've seen since the highs back at 9.1. And when I told you guys back when we did this, if this ends up being the top, you can look for risk assets to start looking for the lows. Because if inflation starts trending lower, even though they will be hiking rates, markets will go higher because inflation trending lower is good news. And since inflation peaked, the markets have been trending higher, or at least going higher. Right? So it's a good channel to subscribe to. If you want to stay on the right side of the markets consistently, I suggest you subscribe. I'm going through a little bit of an issue with my voice right now, but that will be fixed as it is a medical condition and medications will fix it. We are working on it currently. So as we wait on mana to hit our 2-to-1 risk to reward here, we can take profits and close that, or at least take our risk off and let the rest run just to see what happens with this. Once again, if you're just joining us, we've seen a lot of volume being traded in this asset for the last couple of weeks, or well, for a week, 2 weeks, right? A ton of volume just all of a sudden showing up in this asset. Now, we don't know if that means we're going to break out or down. And then again, it doesn't mean that it has to do anything either, right? This could just be a rebalancing of a portfolio. And if the rebalancing is done correctly, you can see massive amounts of volume being thrown down on an asset with slight price fluctuations. It just depends on if it's done on exchange or off exchange. But it looks like it's being done on exchange, because if we go to mana on, say, Coinbase, you don't have all of that volume. So it's only on the Bitget exchange where we see that crazy volume coming in. There's a reason for it. That's the reason why I'm looking to play with it today. We're almost at profit target. We're targeting 61 cents. Rounded up, that would be 62, but... And on the hourly time frame, this thing did a beautiful bounce. Beautiful bounce off the weekly support here. So here's your weekly support, bullish expansion, but staying inside of the range, right? You did close inside of this candle's range. This candle stayed inside of the range. So all of your bodies have been closing consistently inside of this range, but this volume came in heavy, heavy, heavy on this push lower into support. So as a price action analyst, as that's what I am, it looks to me like there's a pretty good chance that we're going to test the outer boundaries of the range again. And that's all we are doing, positioning ourselves for that. But obviously, we don't know that that will play out, as nobody ever knows. We never know. We never know. What Korean guy? I don't know his name. He's a streamer, a very popular streamer, I guess, over there in Korea. I don't know. I just seen it on Twitter. Let me see if I can pull it up over here. Right here, this guy. After being liquidated twice today already, Korean streamer Sato re-enters shorts for 100K position size. He's not happy I know yesterday this was posted as well with a couple $1 million loss. So he's playing with big funds. It shows that he's up 231 USDT. That's not big funds, but I can't tell if that's a period or a comma. Realized P&L, he's down pretty big overall. So $100,000 position size. He's literally trying to short something that is moving straight up. It's not what you want to do. That's not how you play the game. It's just gambling. Bitcoin has made another move to the upside. You have taken out intraday resistance with this closure here. So it does look like it is looking to attack the high of day again. This is your high of day on Bitcoin, the current high of day. So we will see if you get a new high of day. If Bitcoin does get another blast off, which isn't, typically when you get a big move like that, the next day will be a small muted range. And then you get like kind of like a three bar play or whatever. You can see that here. You broke out above resistance. Then your second day was kind of a small muted range. Then you got another big day. Same thing here, right? Big move up, small consolidation, big move up. But that's not on a daily. That's on an hourly. Here you go. Perfect example on the dailies. A big move up, slight consolidation for a couple days, then another leg to the upside. So big move up, slight consolidation for a couple days, then your next leg up, if you will. But it doesn't always play out like that. Sometimes you just keep going and going on these cryptocurrencies. But the S&P 500 seems to be holding that weekly level of resistance. Right there is the weekly level of resistance, but it is also staying under last week's close, which is just above. So this is where you've been already. This is where you're back to. Today's Tuesday. So is this going to be the low of week? Only time will tell. Only time will tell. De-risk into CPI is extremely likely today. Yeah. Capo told me to exit all markets. I don't know, Capo. Hey, Heath, a bit later, could we please take a look at SOXL? Yeah, we can look at SOXL right now. As we're going to try to keep these streams a little shorter because there is a ton of bigger streamers that are streaming now at these times for whatever reason. Is SOXL, is that a stock or is it a crypto? I'm going to say it's a stock. Yeah, a lot of bigger guys have started doing live streams now around the New York Open, so there's quite a bit of competition for small channels to stream during the market open. But we take trades here, so we're not just rambling. That's the edge that we use. We actually trade here. SOXL looks like you gapped up on the open and you're pulling back to close the gap. It is slightly up. Year to date, it's bullish. Here's your year to date chart. But you can see that you're clearly in a long-term range here. You had a nice move at the beginning of the year, all the way up into February. And since February, you've been sideways. All right. So basically what I like to do here is go look at the monthly time frame, as it will show you the range that you're currently in. Meaning this is the beginning of the year. Here is your first month expansion. Second month was an expansion, but it was faded, closed out. And then the end of the quarter, third month, expansion. So it looks like you are pulling back once again. So this would be the area that I would be looking for potential buying opportunities. Down here at 1465. Now you are pulling back before resistance. So this candle will be resistance until you close a monthly above it. So there is your range, if you will. Notice how price is currently trading on the inside or the middle of this range. There is no trade here. The trade will be here or here. Now you can find daily supports that are as close to this monthly level as possible and see if support holds. For instance, you have a support here and it acted as resistance there. Yesterday, you broke out above it. Today, you gapped up on the open. You're pulling back. If you could pull back to there, as long as 1592 holds intraday, you could look for potential day trades back up to 1639, as that's yesterday's close. Because you are on a leg lower. So you don't look to like get long here and target this up there. You are pushing lower. So you would look at this as like a bounce, if you will. Intraday, if you get all the way down here and you keep blasting through it, then you're just going to have to wait until you make daily supports close to 1465. Then you will look for potential entries. Maybe let like something like this happen before you look to do that. All right, we got 20 minutes left on that mana trade on the hourly. But you can see that we are pushing back down. So we did not quite get to our profit target. So we may eat a loss on this. It's okay because you already got a pretty sizable bullish move. This is where we should have been looking for entries, but like I said, I just found it today. So maybe today isn't the setup. Maybe the setup is in a couple days, right? Maybe the setup is down here at 61.42. Instead of trying to get long way up here into resistance, if we fail, we'll close out that position and then we'll wait to see how it reacts once it gets down to here. Then if we see support holding in this area, we'll look to take another shot at it and we'll target back up to 61. But a daily close under that, and we'll probably take it off watch. Yeah. I mean, I like it. On the 3-day, it looks fantastic. These are targets. People are going to look at this as selling pressure. To me, those are bullish targets, not selling pressure. So if we do get back down to here, I would potentially take another shot at it. Especially since the account is up nicely thanks to that Bitcoin breakout. So Bitcoin broke out above resistance and is now showing a trap. So if you're going to short it, this is the first signal you've gotten to do that. Would I short it? No. But I will definitely take profits again on another bounce higher, as this could signify the end of the rally for a little while. And then again, this could just be a big old bear trap, right? Oops, I didn't mean to do that. So let's go ahead and close that position down here on mana, as it did not work. Let me make sure I'm not closing out the Bitcoin trade. The Bitcoin trade is up 319%. I don't want to close it just yet, just based off of 1 hourly candle. Right? We'll let this pull back to daily support and then we'll look to take another shot at it. Daily support is here. Daily support here. Or if today does not close all the way down there, we'll watch wherever today closes. We have CPI tomorrow and then initial jobless claims on Thursday. So you're probably going to see a lot of sideways choppy price action today and tomorrow up to the CPI print. Once you get the CPI print, depending on if it's higher or lower, that will determine, what people would expect the market to do. But then we'll watch to see how the market reacts to that news and then look to fade it at the open or something like that. there's definitely a trade that can happen tomorrow. I thank you for picking me, my friend. I really do. Yeah, I can see what you're saying, Predex, for sure. I don't think I would open a brand new short position on Bitcoin, but it could work. There's been times where, we've shorted the top and nailed it, but those trades don't work out as often as they do when you're literally taking positions in the same direction as the trend. The trend on the S&P 500 is sideways. Dow Jones is just, you've closed several green days, but notice how you haven't went anywhere. And this is the yearly opening range on the Dow. So it does look like you're consolidating at the open of the year. And you have not been able to close a daily under 33,431. So that's a good spot to look for a potential bounce and move higher. Current high of the year for 2023 on the Dow is 34,515. And then the low of the year is new. It's down there. So current structure on the Dow, still a little bearish if we fib the range. You can see here, still right in that area where we could see a liquidation break back to the downside. The yearly opening range is also the 618. Ain't that amazing? You see that? If you fib the range, the 618 is the yearly open. Perfectly. It's the same price. So this could still be a shortable event on the Dow. So what we would typically watch tomorrow, CPI print comes out, liquidates that wick, and then boom, you dump. That is if your inflation comes out higher. Higher inflation would be bad. But we'll keep man on the watch list and we'll look for something else also. CAD Swissy short played out perfectly during Asian session last night. Beautiful test of supply here, right there. Support at your target. Notice how you're getting a bounce there. That's because pros are taking profits there. They know this is the operating range. That's where the trading range is. So coming up, boom, short entry. And then on this push lower, this is when they exited their positions. Down. You buy to close a short, and now you're seeing a bounce. You could potentially look to short bounces, but you are at support. The short, in my opinion, would have been up there, not down here. So there's nothing to do on this today. Aussie dollar did the same thing, pushed up into a potential short. But that means we would have to be bullish on the dollar in order to take this short. And we currently have a bearish dollar bias. Currently. That will change if we get back above 103.66. All right. We look to trade the trend, or we look for a potential trend. So anything above 103 is considered bullish. Anything below 103 is considered bearish. But I almost need to look at it over here. Yeah. And on the daily, you're still under the 50. So we still have a bearish bias on this. And not because we think that the dollar's lost its reserve currency status. Nothing like that. We are technical traders. We don't care about the news. We care about the chart. We trade the signals that are given to us. And right now, the signal on the dollar is lower, with a bearish target, I might add. Of $100. That is the bearish target. So that brings into question, do you look to short Aussie dollar or do you look to get long Aussie dollar? Aussie dollar is a risk on, risk off currency. So in a sense, what that means is if it's risk on in the marketplace, you typically look for longs on Aussie dollar. But if I pull this up here, you're going to see that currently you are hovering just under the yearly open. Right? So this could be an attempt to set in the yearly low. Would love to see that low hold. A fresh yearly low would change that outlook. Structurally, it looks bearish. But structurally, the dollar looks bearish too. So, yeah, there's a lot of resistance for Aussie dollar to get up above. So, it could take weeks to months before you get back above that, if you get back above it. I think there are better assets to watch, namely CAD Swiss. That was one of our favorites. CAD Yen was one of our favorites, but based on some relative weakness in the yen, and based on some all of a sudden strength that came into the oil markets, the weakness on this got literally wiped away. So you're back above the yearly opening range. This is now structured a little bit more bullish, but you can see you're still trading inside of a range. So I will still have a semi-bearish bias on CAD yen as long as we're trading under 99,789. Anything above that, guys, and your bearish bias has to stop. You have to stop looking for bearish setups. And then CAD Swiss, this was our favorite bearish setup, and it's trending. So, yay. That one's looking good. And we are also holding shorts on USDJPY. But the short that we're holding on that is from way up here. So it is currently trading above the yearly opening range. We may end up closing the majority of that position because it's been trading sideways for a very long time. And I would like to deploy those assets elsewhere. If this thing don't start trending lower quickly. Right? But we need that Japanese yen strength to come back into the marketplace. So we did have Japanese yen strength for a while here. Then we had a nice pullback. Then we got a bounce. But ever since, we've been trading in this tight range. The marketplace is just trying to figure out its direction. It's trying to figure out the direction it wants to go. And until we have, let me pull this chart up because it's a very important chart. Here is the meeting's probabilities. All right, so interest rates. Up here is your meeting dates and then interest rate. All right. So right now, let's do this. Show you where we currently are. Target range 475 to 5. That's where we currently are. There's a 69.8% chance the market is pricing in a 25 basis point rate hike on the next FOMC meeting. For May the 3rd. There's May the 3rd. Boom. But notice how it changes each time we get another Fed meeting. Next Fed meeting will be in June. So the market's pricing in that there will be a pause in June, right? A pause with a very small probability of 30.2% that there's actually a cut. Then in July, there is more of a probability. This is when it shifts. So Q3, the beginning of Q3, that the Fed actually cuts. If they don't cut on the June meeting. So we don't know if they're going to pause or cut at the June meeting, but as the marketplace is standing right now, as the probabilities are being laid out, right now there's a 70% chance that we hike 25 basis points, and then we pause, then we cut. And then look at this, 9/20, 40% chance that they, we pause. So therefore, like, all the way up until almost the end of the year, we're looking at 475 to 500, where we currently are. Like the interest rate environment that we're currently in, all the way to the end of the year. Then you get another higher probability that you cut by 25 basis point, not hike, cut. And then each Fed meeting after, you'll be cutting interest rates for the very first part of 2024. If this plays out like this is just market probabilities, and we're a long ways out, and a lot of things can happen from here to then. Any black swan event will change this. Basically, if you start seeing banks fail, that would change these probabilities. I'm talking about right now. If nothing were to change right now, this is the probabilities. There is literally a 0.2% chance that will be at this level come December 2023. And then 0.00000 for literally all of 2024. The market is literally pricing in rate cuts, not hikes. So basically, that is if nothing changes. That would fit right nice and pretty with a bullish Bitcoin for the halving of 2024. Would it not? Yes, it would. All right, let's go get one more quick look over here at the S&P 500, and then we'll wrap. Because I don't expect much today. And we're not getting much today. Yeah. Not getting much today in the way of anything. It looks like it's pretty much just chopping sideways with a little bit of down mixed in there. My thesis is that bonds are lying or equity markets are lying. I'm guessing equities will retrace significantly post CPI, but it's all a guess. I mean, the gap isn't relevant for me, but it is for other people. Like, obviously, gaps tend to fill, and that's what everybody's betting on, but they don't have to fill. There's that gap, there's this gap. So those are the only two gaps you currently have on the CME chart. Right? My base case scenario is if you fill this gap, you'll probably then retrace all the way back down and fill this gap. Or this gap doesn't get filled in 2023 and price just works in a choppy manner all the way back down to fill this gap. And then come the beginning of 2024, as long as no black swan events happen and interest rates stay on the same path for the chart that we just looked at, then Bitcoin gets bullish again and goes back up and takes that gap out in 2024. Right? So, I mean, the range as far as how far away the gaps are from near-term price and with current market structure, my ultimate base case is you got to get above this high first before you can even consider this gap. Right here. So you got to get above that before you can even have this gap a target. Simply because all the liquidity has been drawn already. All of it. You just took out last month's high. So if Bitcoin all of a sudden just finds a bunch of supply up here and falls back under this high, you could consolidate for several months back and forth because the low is all the way down there of this. So this one candle right here sat in such a massive range that this is now the range that we will be working inside of as traders. Right? This is the range that we will be operating in as traders. If we get back under this swing high. All right. If the market is reaching for this liquidity, then there is no reason that it couldn't go up there and fill that gap. But I wouldn't even be worried about it, like I said, until we got above this high. This is a very big candle. There is a lot of volume in here still. So the market can bounce around left and right, up and down. It can't go left, but up and down to the right for a very long time as it fills in each and every one of these price points. There's a gap at price chart too. This is the CME price chart. If you're seeing a gap in the spot price chart, then it's because you're using Finex or a less liquid exchange. There should not be any gaps in Coinbase because the market trades 24/7. There should not be any gaps. That's why we use the Coinbase chart to eliminate gaps. The CME chart is the only chart that matters when it comes to gaps. That's just my opinion. It's the only one that matters. And like I said, guys, the gaps do not have to fill. We have stocks that have gaps that will never be filled. Ever. Ever, ever. On the SPY, there are gaps that will never be filled. Ever, ever, ever. So, gaps, just because they're there, that does not mean they will have to fill. Just focus on the signal, right? Focus on what we know. Focus on the objective levels. When you have a breakout like this, you should be positioned for the breakout, which we are. And then you wait for price to set in a new range. And then you take your opportunities when given to you. Right? That's all your job is as a trader to do, is to just not try to predict price direction. You operate inside of the range the market gives you on a month-to-month, week-to-week, day-by-day basis. That's it. When you do stuff like this, it's difficult. It makes our job a lot more difficult, for sure. But it's still possible to make profitable trades inside of that. So all we're doing is we're working inside of these ranges. We're just trying to get in, get out with a little bit of profit, and we move on. We wait for the next opportunity. We wait for the next range to be set. And if you're in trending markets, we look to buy the support. And if you're in a downtrending market, we look to sell any resistance. Resistance. Those are our areas of operation. Uptrend, you buy support. Breakout, buy support. Breakout, buy support. Right now we're trending. So right now we're trying to just basically be a buyer of support. 27,992 is going to be an area of relevance. If price pulls back that deeply, this will be the next area that we would be expecting the market to bounce from, at least a small bounce. But just subscribe to the channel. I'll keep you on the right side of the market. Follow me on Twitter. All that jive. We'll keep you on the right side of the markets. I've been crushing the market. I've been right on every macro market call since the channel's been public. We told you up here was the top. We told you right there was a short. We had a bear market target of 26K. That is when we hit it there. Once we hit the MVRBZ score down in here, this is when we stop being bearish. Obviously, we didn't know FTX was going to collapse, but we were still buyers here. We were still not bearish. We did short this move, but that was just for a day trade. Our ultimate bias was to look for long positions coming into 2023. And on the very first day of the year, we got long. And here we are now. So, yeah, just stick with me. I'll do my best to keep you on the right side of the market. Let this trend do its thing. If they are considering that big of a decline on CPI, that should be very bullish, in my opinion. If you're forecasting 5.2%, that's a drop down to here, roughly. If you get 5.1 and under, that should cause a nice bullish pop in the market. It doesn't mean it will, it just should, right? Because you're trending lower. Inflation is trending lower. That's what we want. That's good for markets. That's good for risk on. We know Bitcoin is risk on because, well, since this is topped out, Bitcoin's been going up. As this trends lower, Bitcoin trends higher. All in all, that has been the trend, and I see no reason for that to change. Thank you guys so much for being here, as always. We will see you tomorrow morning during CPI. We'll see what happens. We'll see how the market, how it reacts to the numbers. See what we get and see how it reacts. Thank you so much for your time. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everyone.